So whatever the items that comes in the trial balance should appear only once. Included among the data, we have to receive how much? 3,000. How much you have to pay to release 2,000? So there is a difference of 2,000. Trial balance has got two sides. One is called the debit side, and is called the credit side. Debit side shows the expenses, credit side shows the income. Hello, my dear student. I am Dr. B.S. Subramanya. Call my name Dr. B.S. Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Fundamentals of Financial Accounting, First Semester, Unit 3, Session 2 in favor of BCom. Final accounts of sole trading concern, specimen and format. I told you in the last session itself, I had given a specimen of the final account. Now, I am going to solve the second problem with all good adjustment, which is very, very important from the examination point of view. It will last for 15 marks. I will go through the problem very slowly. So, they will give the trial balance. I will explain once again what is trial balance. Then we prepare trading and profit and loss account. We'll move on. So this is a trial balance. They are going from the following trial balance, prepare the final account. So trial balance has got two sides. One is called the debit side and is called the credit side. Debit side shows the expenses, credit side shows the income. Debit side shows the asset, credit side shows the liability. I will repeat. Debit side shows the expenses, credit side shows the income, debit side shows the asset, credit side shows the liability. I will go through which is asset or liability. Cash in hand is an asset. Cash at bank is an asset. Bill receivable is an asset. Bill payable is a liability. Purchase will come trading account. Return should be deducted. Sales will also come in the trading account. Sales return should be deducted. Drawings and capital will come in the balance sheet. Debtor is an asset. Creditor is here. Creditor is 90,000. Debtor is 1,10,000. This is discount allowed, this is discount received, will come profit and loss account. Carriage inward comes in trading account. Carriage outward will come in profit and loss account. Salary and salary outstanding, salary paid, profit and loss account. Outstanding will come on the liability side of the balance sheet. Bad debt is a loss. RBD means old RBD formula. Bad debt plus new RBD minus old RBD. Commission paid, commission received, profit and loss account. Insurance, profit and loss account. Office rent, profit and loss account. Trade expenses, profit and loss account. If the trade expense and general expense both are given the problem, trade expense goes to trading account, general expense goes to profit and loss account. If any one of the two is given, it should be treated in profit and loss account. Then land and building is an asset, plant and machinery is an asset, furniture is an asset, wages trading account, computer is an asset, 9% government bonds is an asset, interest on government bonds we receive, it will come paid account credit side. So this is a trial balance. So whatever the item that comes in the trial balance should appear only once. Whatever the item that will come in the trial balance should appear only once. So these are all adjustment should appear minimum twice. The items in the trial balance should come only once. The items in the adjustment should appear minimum 2 times. Closing stock, trading account credit side, asset side of the balance sheet. Stock destroyed by fire, 6,800. And how much amount recovered from insurance? 4,300. So we got 6,800. Stock destroyed. How much recovered? 4,300. There's a difference of 2,500. 6,800 will appear at trading account credit side. 4,300 will come on the asset side of the balance sheet as a due from insurance company. The difference 2,500 is a loss on stock. Profit and loss account debit side. Insurance prepaid should be deducted from insurance, then prepaid will come on the asset side of the balance sheet. Rent for the month of December is due means outstanding. 1 month you have to miss, 11-month rent has been paid, 1 month is outstanding. Rate of further bad debt 4,000. Included in debtor is rupees 3,000 due from Ravi, and included among the creditor is rupees 2,000 due to Ravi. This I am going to explain. Here, if you go through that particular problem, what's the value of the debtor? You see that we can understand. You have a debtor. What's the value of the debtor? 1,10,000. Then the problem says no. Rate of further bad debt rupees 4,000. Included among the debtor is 3,000 due from Ravi. Included among creditor is 2,000 due to Ravi. So, included among the debtor, we have to receive how much? 3,000. How much you have to pay to Ravi is 2,000. So, there is a difference of 2,000. So, that I am going to explain. So, it starts from, there is no opening stock. Purchases 2,60,600 minus purchase return is 6,000. Balance is 2,54,600. Wages paid 4,000. Carry inward 4,300. Sales 4,12,000. Sales return is 14,000. Balance is 3,98,000. Then stock destroyed by fire is 6,800 and closing stock is 42,300. Totally 4,47,100. Difference is 1,84,200, which is considered as a gross profit. Brought down by gross profit, brought down 1,84,200. By discount received 8,600. By commission received 1,600. By interest on government bonds 9,000. Come back to debit side. Salaries paid 12,000. Discount 3,100. Carry age outward 9,000. Rent paid is 1,800 only for 11 months because 1 month is outstanding. 1,800 divided by 11 into 1, it comes to 164. It becomes 1,964. Then insurance 600. How much prepaid? 200. That should be deducted. 400. Trade expenses is 400. Commission paid 400. Old bad debt is 1,800 as per the trial balance. Add new bad debt as per the adjustment is 4,000. It becomes 5,800. Less old RBD as per the trial balance is 3,100. This becomes 2,700. So the stock destroyed is, we have got, I told you in the first class, whatever the stock destroyed comes here, 6,800. How much loss? 2,500. Here the credit side total is 2,03,400. So there is a difference of 1,70,936. We'll move on to balance sheet now. Cash in hand is an asset. Cash at bank is an asset. Building, plant and machinery, furniture, computer, 9% government bonds. Debtor 1,10,000. Less amount due to Ravi is a creditor. Set up against amount due from Ravi debtor 2,000. Out of 1,10,000, how much has gone? 2,000 has gone. Then new bad debt as per the adjustment is 4,000. Then you got 1,04,000 rupees is there. Total debtor is 1,10,000. Less amount due to Ravi. Creditor is set up against the amount due from Ravi debtor 2,000. What's the balance? 1,08,000. Less new bad debt is 4,000. 1,04,000. So this will go to here. Adjustment. See that? Rate of further bad debt. How much is there? 4,000 is there. No? Here further bad debt 4,000. Totally how much you have to receive? 1,10,000. Amount due to Ravi creditor against the amount due from debtor is 2,000. Here see the adjustment. Included in debtor 3,000 we have to receive due from Ravi, and included among the creditor is 2,000 due to Ravi. We have to receive 3,000. We have to pay 2,000. That is adjusted here. Amount due to Ravi is a creditor against the amount due from Ravi is a debtor. How much money? 2,000 is there. Out of 1,10,000, how much has gone? 2,000 has gone. What's the balance? 1,08,000. New bad debt is 4,000. It becomes 1,04,000. So bills receivable is an asset. Prepaid insurance is an asset. Closing stock is an asset. Come back here. Liability side, capital, less drawing, add net profit, bills payable, creditor is 90,000, less amount due from Ravi debtor is 2,000. That 2,000 is adjusted here. Less amount due from Ravi debtor set up against the amount 2,000. That is 88,000. Outstanding salary 1,700. Then outstanding rent 164. This 2,000 here. This is adjusted. This is 3,000 adjusted. 4,000 is a bad day. Then include amount the creditor 2,000 adjusted. This is adjusted amount. Capital 1 lakh, the net profit. Creditor 90,000. Less amount due from Ravi debtor. Set up against the amount due to Ravi. Creditor 2,000. It become 88,000. How much outstanding salary? 1,700. How much outstanding? 164. It will tally for 7,27,800. So this I will explain. Here, further bad debt is 4,000. Included among the debtor is 3,000 due from Ravi. Who has to pay? Ravi has to pay. Included among the, we have to pay due to Ravi. So among the creditor, we have to pay 2,000 Ravi. That is adjusted here. How much adjusted? 2,000. Just mutual adjustment. Whichever the low figure comes, that should be adjusted here. We have got 3,000, we have got 2,000. We have to pay the 2,000 to them. So here, less amount due to Ravi, we have to pay the Ravi 2,000. But here another is 2,000 is we have to pay. So you have got to receive 3,000, we have to pay 2,000. That mutual adjustment we can do 2,000 rupees. So deduct 2,000 here, deduct 2,000 from the debtor, 2,000 from the creditor. Whichever the lowest amount comes, that amount should be deducted either from debtor, here also creditor, double entry. One side you have to deduct from the creditor, one side we have to deduct from the debtor, mutual adjustment. Because same person is there, we have to receive, we have to pay. The amount, the balance is only 2,000 is adjusted. Then this is a new bad debt as per the adjustment. Here it should be deducted. Then in the balance, what's called profit and loss account, bad debt, add further bad debt. See that? If you go through the profit and loss account, we can understand. Old bad debt already existing. Bad debt as per the trial, what's called adjustment is 4,000. Old already as per the trial balance 3,000. It becomes 2,700. This is loss on stock destroyed. Out of this total amount, some amount received from the insurance company. Whatever the difference comes, that's called loss on stock destroyed. The difference will come 1,70,936, which will be transferred to profit and loss account, transferred to balance sheet. Cash in hand as an asset, cash at bank is asset, building asset, machinery asset, furniture asset, computer asset. 9% government bond is an asset, debtor is an asset, then insurance claim is an asset. Here, insurance claim is 4,300, bill received is an asset, prepaid insurance is an asset, closing stock is an asset. So this is a mutual adjustment, less amount. Then outstanding salary, then here capital, less drawing, add net profit, bills payable, creditor is 90,000, mutual adjustment 2,000, it becomes 88,000, outstanding salary, outstanding rent. So totally it will tally for 7,27,800. We have solved the problem here. This will come for 15 marks. They will give the trial balance. They will give the adjustment. So trial balance item will appear only once, whereas adjustment should appear minimum 2 times or 3 times are considered. So whatever the item comes in the trial balance should appear only once. Remember, whatever the items come from the adjustment should appear twice. So they will give the trial balance and adjustment. Trial balance shows already so many times I told you, debit side expenses, credit side income, debit side asset, credit side liability. Hope you understand. You'll have some more problems. Till then, goodbye. Meet in the next session.